Hello everybody and welcome to Project Trade. This is the Trading Highlights Show. In this one we're going to be looking at a technical trading strategy. And it's as simple as it can be with the simple moving average crossover, a strategy which is familiar to most traders. We do have a detailed video on the simple moving average which will be linked in the video description if you want to check that out. But in a sentence, what it's doing is it's adding together all of the individual prices from each of the periods that you're looking back at and then taking that total and dividing it by the number of periods. This gives you a mean average of market price. It smooths out that noise. For our crossover strategy, we'll be using two averages. Our fast average will be the 50 period, which looks a little something like this. And our slow moving average will be the 200 period average, which will be a bit like this one here. The 50 and the 200, they are a classic combination for fast and slow averages. Their crossovers are commonly known as the death cross and the golden cross. So what are our specific rules for entering the trade? To satisfy our entry criteria, we need the 50 period faster average to cross over that 200 period slower average. That is when we make our move. You can see here on the left, when the blue line crosses below the purple line, that's when we would enter our sell trade. And over there on the right hand side, when it comes back up over the purple, that's when we would be a buyer. That is all we will need for our entry signals. Just be aware that when we start a trading session, we will have to wait for the crossover to happen rather than jumping in on an existing trend. Now we know how we will enter a trade, let's figure out how we will manage our money once we're in that trade. First off, every single day I get asked by thousands of people, hey, when I open a trade and risk X amount of fiat currency, should I hold that same X amount of gold in my personal vaults? Do I need to back my trades with real gold? And my answer to most of these people is no. There is a simpler, more efficient way to manage your risk. First off, we're going to split our one trade into two half trades or sub trades, and we will risk 0.25% of our capital on each of those half trades for a total of 0.5% capital risk. Obviously that does seem quite small, and a lot of traders will use the 2% rule for when they're trading, but we want to keep our capital pretty tight on this one, so we know how much we're willing to risk. When are we actually going to get out of the trade? To help us with that, we're going to use the average true range. It's a well-known volatility indicator and we have done a video on it which will be in the description, but to say here the ATR, it just measures the average range of each candle from top to bottom. And if you have a look in the top left there where that red circle is, that is our ATR value. That is what we will be referring to if we say 1x ATR, 2x ATR for setting our take profit or stop loss. That is what we're referring to. For both our half trades, we'll be setting our stop loss 3 times the ATR value from our entry price. It might seem a little wide, but trust me on this one, we do want to give them room to move. For our take profit, we'll be setting one of our half trades as 3 times ATR from our entry price, so that will mirror the stop loss distance. And if we're lucky enough for that take profit to trigger, then at that point on our second half trade, we will change our stop loss to be a trailing stop loss. And we'll set that trailing stop loss back 3 times the ATR value, which is effectively our entry price. Remember, the trading stop loss will only advance in our favor as they cannot drop back at any point, meaning that at this stage we would actually be in guaranteed profit for our entire trade, because our second half trade could only finish back at our entry price for nothing gained, nothing lost, but we would have already taken profit on our first half trade, so it is a very good place to be in because it's all upside. Now we know both how we will enter and how we will exit. We just need to know what we're trading on, which will be a 1 minute time frame. It is going to be like standing 2 foot in front of a jet engine out there. It will be incredibly noisy on that chart. And we're trading Forex on the euro dollar pair. That is the big one. It is the most traded pair in all of Forex. Certainly not the most manipulated pair, of course, just a popular one. And we will be journaling all of our trades so that we can track our progress and cement in writing how good or bad the strategy actually is. That is absolutely everything we need apart from the platform, so let's get in there. Okay, just gone 10:57 a.m. and here we are on that euro US dollar 1 minute chart. You can see price has been coming down here. We've got both our indicators pulled up. That's the 50 there in the blue and the 200 moving average in the purple. Price has been coming down. It looks like it's going to be making consistently lower lows. We did have an entry that would have been back here. That was quite a ways ago. As you can tell, the next trade we're going to get in is going to be a buy. It did start coming a little bit close here when the price was up in that range, but then it's immediately come way back down. That's our economic calendar for the day. As price continues to just drop quite a bit there. I just noticed that couple of ticks. It really is going down. But yeah, so this is our economic calendar. So some of this Asia stuff, or all this Asia stuff has happened already. Good news for Japan as they beat their GDP Q on Q year on year. And they had another one, industrial production. They also beat by a little bit, 6.5 over 6.2. Whereas China, missing all of their estimates basically. Retail sales, industrial production, employment rate, all a little bit weaker than expected. Not that any of those would affect us on the Euro-US dollar. It's just good to be aware of what's going on around the world. And yeah, nothing really that's going to impact much today. We've got the New York Manufacturing Index. That's their survey coming out 3:30, but it's just New York State, so it might have a minor impact, but I very much doubt it. So yeah, there should be no economic headwinds for us. It means we shouldn't get stopped out on our technical based strategy due to any economic factors. But it will be waiting for that buy signal. We don't have a re-entry signal here, and we can't go until the cross actually happens. Could be that the euro just goes short all day. We don't actually get in a trade, but on the 1 minute chart, there should be enough deviations up and down of the price that eventually we will just get a crossover at some point. And hopefully that crossover turns into a full reversal. We don't want it to just be a temporary crossover in the overall downward trend. But we'll check back in when something a little more interesting is going on for us. Price having a go of it the last 5 or 10 minutes. It is just sneaking back above the 50, which does draw us closer to the crossover. Only managed to just stay above there for a little short while though, just edging through a couple times as price has come back down again the last 5 or 6 bars. Although as soon as you say that, this is what can happen on the 1 minute chart. As soon as you say something, immediately the opposite thing just happens. And it has turned into a bit of a more consistent move above the 50 as it starts to range up there. We want that 50 to actually turn upwards though. Start to turn as that 200 comes down. And we got exactly what we wanted there as price just closes above the 200 and the 50 has started to turn. But then again, price crashing down these last few minutes here. Look at that, back below the 200, back below the 50. We could still see a cross depending on whether this keeps going, but if it does keep going, those lines will avoid one another and the 50 will do another sharp turn. Just going to zoom in a bit here because these lines are very nearly touching. Look at that, they are so close. These lines touching now, but price is coming down a bit. I'm going to put up the ATR just in case we can have that ready. And there's the ATR just shy of 1 pip at the moment at 9 pipettes. So now we can see that the 50 is just poking through the 200. If it closes like that, then we will be getting in, even if price is coming down. If price comes down enough, this will turn, it won't close above there, it will go flatter. This is very close, so we're going in. We've got about 5 seconds here. Let's see if this closes, see what the next candle starts doing, but we will look to get in. Yeah. That's definitely closed past it. So even though price is looking like it's going to go down, we're going to calculate our risk so we can get into this trade. We've got 8 pipettes down here. We are going to round that up to 1 pip as 8 pipettes is tiny. So we're doing 3 times ATR. So we're going to call that 3 pips either way. And so our account balance down here, you can see is £98,362. We got 2 half trades that we're going to go in with. This is really dropping. If we got in straight away, that would be bad. And it still doesn't look great, but this is a crossover, so we're going to go for it. Here's our risk on screen now as we've calculated it. And so let's get in there. There we are now. So we're in with our 2 buy trades. And so we can pull this up and we can say well, it's 3 pips. We can call that 30 points and we can do the same for our take profit on that one. You can see that appearing just up there and down there. And then likewise with this one here, we can call that 30 points for our 3 pips. And that will change to a trailing stop loss if the take profit on our first trade is able to trigger. But that is another big drop from price. It looks like it wants to come down. We might not have a bad entry position if it can turn, but the current trend is not looking good. And that 50 you can see is already turned against what we want. And it really looks as though that 50 is going to cross back under the 200. This could be terrible. We could get stuck in a really bad range here. But if this 50 does cross under the 200, what that means is that we will close the buy trade we're in, wherever that's at the time, and we will enter into the sell trade. Okay, so it has closed past there now. First thing we're going to do is just shut off these two buy trades here for losses. And now we'll calculate our new risk. Risks staying the same, so we 3 pips again. Just round up this 8 pipette to 1 pip. And so we're in with our volume this time a little bit lower at 11.32. In fact, I'll round that up to 11.33. Here it is on screen now, the risk. And there we are, we're in our sell trades now. So let's set those stop loss and take profit again. That's one of them. And a stop loss of 30 points for this one, which again will change to a trading stop loss if we're ever so lucky. Price headed up towards our stop loss there again. Looks like we're going to be in close to the bottom if this carries on and breaches it. Which it does in fact breach just there. So that is another loss, unfortunately. And there we see a move downwards. So we really did get in a bad time and we got caught out in the retracement as the move does continue to the south. We will be waiting before we get another entry signal, I'm afraid. I've just pulled up the trade history here so you can see the first 2 trades. That was where we got in the long and then had to drop it there when it came back out the other side, which wasn't the worst loss. This one definitely feels worse when we see it now. And we can see we get in here right at the bottom and then up here, bosh, it gets us. Had we gotten immediately at the start of this candle, that 3 pips would have been up here, thereabouts, and then we would have not been stopped out. It would have taken profit down here. Well, if it was up here, we would have taken profit, yeah, in this line here. So a little bit unfortunate with that one, but that is the way it goes. First signs of a new crossover appearing as we see the price back above the 50 average for the last few periods. Price a bit uncertain around this 50 average now. It did dip underneath there again, but now coming back up a little bit. It's not sure what to do. Price getting just a little bit past that resistance level now. It does look like it wants to break past the 200. Yeah, now we see that move above 200. Price closing for the last 2 periods above it. The 50 is chasing. Price taking a big hit there, gone well below the 50, and that's on quite an increase in volume as well. And it has continued to push down even further below the 50, which is going to drag that away from the 200. Less likely to see a crossover, obviously, if price carries on this way. Well, price came down a lot, but it is coming strong out the gate as we just passed 2 o'clock. Last couple bars have really had an up bounce there. But comes back down there. This right here is a very uncertain candle. And all the way above the 50 and almost all the way to the bottom of that support area there. Will we get another bounce from this level here? We had a little one there before it's come straight back down. It's going to be tested again. And it does breach it this time in pretty spectacular fashion as it's just closed there. We can see that is a drop. And this drop does continue here. It bounced off a little bit of that previous level there. You can see it lines up like that. So it did bounce off of that and immediately has come back down and got to a lower low than it did before. It's going to be a while before we get a trade. Yeah, that drop's still going. Down it goes. That euro not in favor here against the dollar. Things turn red even more. Price did just creep above the 50 there a couple minutes ago. Just a little bit above. That was the New York Open there. So we did see a touch increase in volume, but not a huge amount to be fair. But yeah, that was the Open. And we've got those manufacturing numbers for you, New York, coming out in 15 minutes or so. 3:30, that's when they drop. I don't think it's going to have much of an impact, but it's worth checking them out and seeing what the vibe is in New York. Here comes those New York manufacturing numbers then. Five minutes after the release of those numbers now, and we are seeing a bit of a breakout. It was very rangy before the price, but now it's gone definitely to the upside for the euro. 31.1 was the forecast for the manufacturing index. Came in at 18.3. That does mean that they think conditions are getting better. However, it's not as good as they thought it was going to be. And so it would make sense that the dollar would get weaker off the back of that news if it's going to have an impact. Either way, price is going to the upside right now. Price getting above the 200 as well there, and the 50 is chasing it, so it's looking quite nice. It ranged a bit there, but another push, and the move continues again. Just a couple minutes later, those candles are pushing green. It's what we like to see. Again, higher and higher movements from price here, making it very likely that this crossover is going to happen. Price really with a rocket on it here again, last period moving up a lot. So these lines are almost certainly going to cross unless something terrible happens to absolutely crash the price. So let's pull up the ATR and have a look. There's our ATR. I'm sure a lot of you are going to have the same worry I'm having when I'm looking at this, is that once we get in, this price is going to exhaust itself, and even on a retracement, it's going to come back down. So there we've got the 50 average sticking through the 200. That's the first period it's gone through, so we are just going to wait for this one to close, and then we'll be in the trade. Okay, so this is going to close. We're going to call this 1.5 pips, so that is 4.5 pips for the total stop loss and initial take profit. There is our risk on screen if you want to check that out now. So let's get in the trade. There's our two buy trades. They did enter in 1 pipette off from each other. A little bit disappointing there. Do try to be quick on the draw to get them identical, but hey ho. Let's set that stop loss and take profit. So again, 4.5 pips, so we'll go 45 points and 45 points on that one. And then for this one right here, we'll just drop on that stop loss. If we do get the take profit, which judging by the price movement at the moment, it doesn't look like we will, but if we do get the take profit on the one, we'll be able to change this to that trading stop loss. Getting dangerously close to our stop loss already. This was, yeah, one of them's gone, and then the other one's gone as well with that extra little pipette there. So it has, most of the move there had exhausted itself to knock us out for another loss. Price starting to make moves now beneath the 200. It did just range for about 20 minutes or so there. Now it drops below as the 50 average starts to turn back down as well. Strong move there beneath the 200. Wow, really pushing down. If you see a couple more of those, then again, 50 will catch up with that 200 and we'll see another crossover. Price though now come back up above the 200, above the 50, looking less likely now. The 50 and the 200 are still relatively close to one another, so if a big drop does come, it wouldn't take too long for the actual cross to follow. But at the moment it does feel like it's going to be very rangy, and it's questionable as to whether we actually want the trade. Price getting a big way to the upside there though the last 10 or 15 minutes, and the 50 is going with it as well. Because we don't have that re-entry signal, look at it move that 50, because we don't have that re-entry signal, and I don't know now how long it's going to be before we can get a crossover, I'm going to call it there for the day's session. We will be back for part 2 to try and get back some of our losses, but for now, let's review those losses over in the journal. Okay, here we are in the journal where you can see our losing trades from the day. 3 losers, sadly, and so all the half trades cutting off. 4 of them directly at stop loss. That first buy trade there, that cut off before we even got a chance for it to trigger the stop loss, because it already, the indicators already reversed. That crossover already happened to the reverse, which got us into that sell trade. Was a bit unlucky on that sell trade with the retracement there. Right at the top of that retracement, we got cut off. If we'd entered the trade immediately at the top of the minute, then it's likely that it might not have procced the stop loss, and we could have taken a little bit of profits. But that was a full 0.5% loss, the max stop loss there. And then same again for the last buy trade. We kind of knew going into it that the momentum looked pretty exhausted, and it was going to be difficult without an overarching news story or economic number that was pushing it. It was going to be difficult for it to get further momentum than what it got. So we did end up getting stop lossed out on that one, on the retracement. And then the price sort of ranged for a bit before it did carry on the upward move. That is all for the journal. Not too much that we are excited to review, but it is important to take a look at them regardless and stare all those losses in the face. Thank you for watching, and we'll continue this in session 2.